Stocks fell again today, though not as sharp of a sell-off as yesterday. Looking at the major indices after the closing bell, the Dow Jones finished down 98 points. The S&P and the Nasdaq also lower. This despite a promising April jobs report showing employers added 428,000 jobs and unemployment is at a 50-year low. NewsNation's Tom Negevin is live in New York to tell us what this week on Wall Street means for everyday Americans. Tom?
You know, after 2 days on Wall Street, Ruta Bay, it's nice to be the bearer of some good news tonight, and we do have it in that report from the Labor Department. Even in the face of the worst inflation in 40 years, U.S. employers have now added 400,000 plus jobs per month for 12 straight months.
Demand for American workers is high in manufacturing and the hospitality sector, a sign that despite turmoil on Wall Street, the economy is fundamentally sound. Treasury Secretary Janet Yellen tweeting it's a strong sign for our recovery. But then there's this, a late rally Wednesday before the stock market tumbled to lows not seen since 2020 as the Federal Reserve works to rein in 4-decade high inflation.
Inflation is much too high, and we understand the hardship it is causing, and we're moving expeditiously to bring it back down.
There are a lot of strong underpinnings to the economy right now, and I think, example A is the job market.
America's employers added 428,000 jobs in April in spite of inflation, supply chain disruptions, war in Ukraine, and much higher interest rates, keeping the unemployment rate at 3.6%, near a half-century low.
The jobs report this morning is really positive, really impressive.
A concern is the strong job market keeping wages and inflation high, raising the cost of borrowing for consumers and businesses, sort of a catch-22 that could keep corporate profits down. And rising interest rates are expected to cool the hot housing market.
One of the things that continues to be disappointing is that what we don't see is workers who are on the sidelines, not working, not looking for work, coming back in, the so-called labor force participation rate. That remains low. And
to drive that point home, Ruta Bay, there are now 1.9 jobs, 2 jobs for every unemployed American worker. We're told it's staying that way, even with some workers rejoining the labor force. A labor market this strong actually supports what the Fed has done this week and will likely continue to do, raising interest rates to battle inflation. In short, expect the cost of borrowing to keep going up, Ruta Bay.
All right, Tom Negevin reporting in New York for us. Thank you. And joining us now to talk more about stocks is financial reporter Sylvan Lane from our partners at The Hill. Welcome to the show. So going off of Tom's reporting, we saw the worst day for the Dow in 2 years. Stocks are continuing to fall. What's going on?
You know, the stock market has a lot of questions on its mind right now. How strong the U.S. economy is right now, how strong will it be in the future as the Fed continues to fight inflation by raising interest rates. Now, we just heard that the April jobs report was quite stellar. But the thing economists are concerned about right now, and by extension the market is concerned about right now, is that as the Fed hikes interest rates, that's going to slow down the economy. And the big question is, what's that going to do to companies, especially companies like technology firms, the companies that really exploded in value over the course of the past year. Those are some of the stocks that are falling the sharpest right now. So the market is trying to process this unprecedented situation with a weird combination of really good things happening in the U.S. economy and a lot of issues happening in the global economy on whole.
Right. It's confusing, to say the least. So America, as Tom just reported, added 428,000 jobs in April. The jobless rate now close to pre-pandemic levels, even as there's talk of a looming recession and amid the inflation that we're all feeling. So square these developments for us. Is a recession on the way?
So economists are becoming more concerned that by 2023 or 2024, we'll get a recession. Now, why are they concerned about a recession coming if the economy is so strong right now? So the reason is because the economy has expanded and grown at such a fast rate over the past year. It's actually going beyond the ability of businesses to keep up with it. Consumer spending still increased even in the face of consumer prices going up by 8.5% on a year. So the big question is the economy almost too good for its own good right now? And will the Federal Reserve need to keep raising interest rates to a point where it could slow down into a crawl?
All right, Sylvan Lane, thank you. Appreciate it.
Thank you for watching. Click the red subscribe button below so you can get more of NewsNation's fact-driven, unbiased coverage.